Hey everybody, it's Ty Crandall with Credit Suite, and in this video, we're going to talk about exactly what you could do to get a business loan. Even if you're a nonprofit, even if you have credit issues, even if you're a startup, we're going to talk about ways that you're able to get approved. So by the end of this video, you're going to know at least a handful or more ways that you can actually go out and get a loan, get a credit line for your business. Even if you've been turned down before, even if you don't think you qualify, in this video, we're going to talk about a lot of options which still may work for you to be able to get the money you need to start and grow your business. So let's jump in. When it comes to getting a business loan or a credit line or any type of business financing, lenders are typically looking at a lendable strength. I call this the 3 C's formula for loan approval. And what it really comes down to is this: cash flow, credit, or collateral. Those are the only C's you really need to remember: cash flow, credit, and collateral. Those are the 3 things that lenders are looking at to approve you. Now, the great news is that with alternative lenders now becoming the predominant force in the lending arena, you're now able to get approved if you only have one of those strengths. So let's dive in and talk a little bit more about each. When it comes to good consumer credit, you're able to get a program called Unsecured Business Financing. Now, with Unsecured Business Financing, this is where you can get credit lines for your business that are only based on consumer credit quality. It's not based on collateral. It's not based on cash flow. So even if you're a startup, even if you're in a high risk industry, even if you're a nonprofit, you're still able to get approved if you have good personal credit, like a 700 FICO score or higher. But what if you don't have that? Well, then you can still get approved using a personal guarantor. So you can use a family member, a friend, a potential investor into your business. You can have them come in, sign as a personal guarantor, and still be able to get these credit lines. Now, the fantastic part is that these credit lines often come with 0% interest rates for 6 to 18 months. You can take all the cash out on these credit lines. And my favorite part is that many of them report to the business credit reporting agencies. That means not only are you able to get cash for your business through these credit lines, you're also able to build business credit at exactly the same time. Pretty cool, right? Now, another way you can get financing for your business is based on collateral. And there's a lot of options available for you when it comes to getting financing based on collateral. So what is collateral? Well, it could be a lot of different things. So for example, maybe you have equipment, maybe you have inventory, or maybe you want to buy equipment or inventory. Maybe you have commercial vehicles, maybe you have real estate or stocks, bonds, 401ks, IRAs, maybe purchase orders or account receivables where your customers are paying you on terms. Any of those things can be used as collateral to get financing for your business. And the best part is, credit and cash flow don't matter. So even if you're a startup, even if you can't verify your cash flow, even if you have severe credit issues, you're still able to get this kind of financing. And the other cool news is that in a lot of cases, the interest rates are 5% or lower on this financing. Just the fact that you have collateral makes you a lower risk. But what if you don't have collateral, when you don't have good credit? Well, then it really comes down to using your revenue to qualify. Financing based on your revenue is some of the easiest financing you're ever going to obtain for your business. As a matter of fact, in a lot of cases, you can get approved and get funded in 48 hours or less. And how it works is they're typically going to electronically look at your bank account or actually ask for bank statements to review them. Now, what they're looking for is that you manage your bank account responsibly, that you have more money coming in than going out, you have a positive ending bank balance at the end of the month, that you don't have a bunch of non-sufficient funds. If you've been in business 3 months or more and you're doing these things, then there's a good probability that you may qualify for financing based on that revenue. And just like all the C's, the best part is if you have this C of cash flow, credit, and collateral, the others don't matter. You only need that one C of cash flow to get approved. Now, the other cool thing about the 3 C's formula is the more of these C's you have, the better financing you're able to obtain. So if you have good credit and you have cash flow, then you're able to move into long-term term loans. You're able to get lines of credit. If you have all 3, cash flow, credit, and collateral, then you're talking about SBA loans with really long terms and really low rates. So if you're looking to get financing for your business, go to creditsuite.com/get funding. That's creditsuite.com/get funding. We'll help you through the process without charging you any money to do so. Okay, lenders oftentimes pay us a referral fee when the deal closes. So it costs you nothing to actually work with us and use our services, and we'll help you qualify with all legitimate financing sources to get you the most amount of money at the best terms. So make sure you check it out at creditsuite.com/get funding to get approved. And make sure you visit creditsuite.com to grab our free guide on building business credit and to check out our social media links at the top right of our page, where we give you all kinds of tips and tactics to help you get the most money for your business. So check us out online at creditsuite.com.